Hello everyone, my name is Moji, and you're watching Bitcoin Bubble News Channel. After every nation-state attack and bit of fake news, if you started with Bitcoin on layer 1, it's decentralized, safe, and can't be broken. The only thing that is repricing all currencies is Bitcoin. Bitcoin has had an ER of 45% for the past 15 years. What does that mean? My rate of return must be plus 45% before I spend. Another thing is that I can't find a place that already has a system in place where I can make 45% a year. So you would just put your money into Bitcoin. Bitcoin comes out of nowhere as a revolutionary force that wants to break away from banks and states. With blockchain technology at its core, it offered a world where money could move freely, safely, and openly, with no middlemen or high fees. Besides money, Bitcoin has the power to change businesses and spark new ideas. It also gives us a glimpse of a future where global transactions are faster, cheaper, and more open to everyone. Famous investor Jeff Booth gave an interesting interview to podcaster Brandon in which he talked about the impending collapse of the global financial system and Bitcoin's unique part in it. This interview further emphasizes Bitcoin's revolutionary potential. Booth showed a very dark picture, with a world balance sheet worth $900 trillion and $400 trillion in debt. If this loan goes bad, the values of assets could drop, wiping out a lot of that wealth. Now though, this is where things get interesting. Booth says that if you divide the leftover value by the 21 million bitcoins that will ever be made, each one could be worth about $43 million. Bitcoin doesn't depend on a system that is failing like real estate does. Because it is hard to get and can't be changed, it is a great way to save money, especially in a world where inflation is eating away at the value of money. Booth says that Bitcoin is the best way to protect yourself from financial chaos. You can learn more about what Jeff Booth said to Brandon by watching clips from the talk. If you want to see more videos like this one, please like it, subscribe to the channel, and turn on post alerts. Have fun with the movie. There is $400 trillion in debt, so the balance sheet would not be $900 trillion if there was no debt. But the $400 trillion in debt can't be paid off. This means that all the assets that you're overestimating because you think the debt is payable are shown on the balance sheet under asset value. You could also picture yourself in that balance sheet with your house as one of your assets. Car, everything else that's worth some money, and the debt you have on it. If you think you if you have a lot of clear assets, then you can keep spending money based on that. Yes, that's why you think your money would be part of that. It looks like you're using power. That tells you how much money you think you have. Now, if all of the debts went bad tomorrow and everything failed, there would be no house prices or money in the bank, and everything would fall apart to, say, $900 to $200. It wouldn't be a good balance sheet. As much as $100 billion could be on the bank sheet. There would be nothing left. Because everything depends on pieces of paper having that and those pieces of paper being able to pay off that loan. To put that amount of money into buying power, you would split it by 21 million, which would give you about $46 million. Each worth $43 million, and now make up for the coins that were lost. How many coins were lost? It would be more than 43 million. But if you think about it, that $900 trillion balance sheet won't be worth that much in 5 years. Also, the debt won't be $400 trillion if it were. The whole thing would fall apart because it needs to grow very quickly. To be able to keep the business going, that is, manipulating money needs to get a lot worse in order for the system to stay alive. And you're judging everything by how much money you change. At that time, the balance sheet was worth $2 quadrillion, with maybe $1.4 billion or $1.4 quadrillion in debt, or even more, as that goes off. In order to do that, you're basically causing inflation and lowering the value of money. It could be more. Then look at Bitcoin at that point in time. Even if it had doubled in value, it hadn't really doubled in value. Just look at the balance sheet to see how much it is. That's what I was trying to say. What is Bitcoin's final value in terms of today's money? That was, just one side of that issue. The other side of that argument is that the 43 million people's purchasing power would grow forever over time if you said that $900 trillion, $400 trillion, and $21 million were fixed today. This is because the free market is deflationary and things are changing so quickly because of technology. Bitcoin is decentralized, safe, and can't be broken, even after every possible attack by a nation-state and every bit of fake news that is out there. Once you understand that the event in question is over and that there is no way to attack Bitcoin in a way that would allow it to be centralized, you will need to take charge of Layer 2. At this point, all of the same strikes are still in the early stages on Layer 2. Most Bitcoiners are making those threats stronger by believing false information about them. Jeff Booth talked about Bitcoin's image as a good investment and showed how it has earned an impressive 45% return over the last 15 years. He said that investors who want to make even more money should focus on building on Bitcoin's infrastructure and technology to create new value and increase the amount of Bitcoin they own. Companies like Sailors, which use their operational businesses to boost Bitcoin's value, show that this method can lead to venture-level returns. Booth also said that this approach is different from how venture capital firms usually work. Businesses can become profitable faster with Bitcoin while adding it to their balance sheets with less dilution than those methods. He also said that Bitcoin is a much better investment than real estate, which is seen as a currency short, and that it has big benefits in an economy that is changing quickly. Its price has been stuck around $3,000 for a while now and is now selling at $2,468. Not being able to move is a problem. This is especially true now that Ethereum ETFs are available, which was meant to boost demand. But for 8 days now, institutional investors have been pulling their money out of these ETFs, which has caused a big loss of cash. Most likely, this drop in institutional interest is because more Ether is being made available, which has changed its trend from deflation to growth. Also, adding 2 chains, which was supposed to help the Ethereum network grow, had an effect that no one saw coming. It made Ether's income go down. This drop in income changed how much it was worth overall, which made the price drop even more. Since August 3rd, Ethereum's price has stayed below $3,000. It's possible for Ethereum to go up if it can stay above this level. If it fails to do that, it might need more changes. At 42.05, the relative strength index RSI is flat, which means that Ethereum is still going down. On the other hand, the moving average convergence divergence MACD indicator shows green histogram bars above the neutral line, which means that line has positive velocity. How well the cryptocurrency can hold on to key support levels will determine where it goes from here. In the short term, Ethereum's short-term fate will depend on how its price moves over the next few days. What do you think about this talk now that it's over? What are the possible risks of